Well, some investors are pulling money out of the stock market and shifting towards cash and bonds, according to strategists from Bank of America. Yahoo Finance's Jared Blikre joins us with more from the New York Stock Exchange. Jared, name them. Who are these investors?
Well, I'll tell you what, healthcare is seeing inflows. Not a lot of else looking at equities, at least in terms of inflows this week, but strong inflows into cash. Money market funds still growing pretty strong inflows, $145 billion into cash quarter to date. Michael Hartnett over at B of A talking about the flows this week. Faster inflows than in the last quarter, which is also big, by the way. Treasuries, so those are government bonds, strong inflows, $127 billion year to date, on pace for an annualizing record of $206 billion. So lots of money going into defensive areas like cash and treasuries. Credit, there's money moving out of high yield bonds. That's the riskier part of the market. You can put that on par with equities. And then EM, biggest debt outflow in 6 weeks. And then finally, we get to healthcare, where we're seeing largest inflow since April of this year, $1.4 billion. Not earth-shattering, but we'll get to some charts in a second. Just want to go over some of the headlines from Michael Hartnett. He's saying 3% CPI, U.S. Treasuries annualizing record more than $206 billion. China deflation, yet we have the 10-year yield over 4% in the U.S. Debt, fiscal, labor, geopolitics. Cost of capital ain't fallen without a hard recession, and stocks suddenly stuck. So basically saying that there is a pain trade to be had sometime in the future when there's a rapid repricing of all of these risks. Now, let's go to the Wi-Fi Interactive, and I'm going to show what's been happening this week. It is a down week, especially when we look at the NASDAQ, which is leading the way down today. 5 days down about 2%, just kind of seesawing its way lower. Let's take a look at the Dow. Actually closing out the week with minuscule gains there. And just to round out the price action, S&P 500 down about 69 basis points. But let's take a look at a longer picture in the market. This is the S&P 500 year to date. I'm going to show you that it's very close, that it's creeping down into its 50-day moving average. That's that blue line you see right there on your screen. If you take a look at the NASDAQ is just below it right now. Russell 2000 pretty much there as well. And take a look at Philly Semiconductor Index here. This is actually below. I think the semiconductor is kind of the canary in the coal mine, especially NVIDIA getting hit yesterday with respect to the AI trade. So that's where I'm laser focused. Apple fell first. We take a look at, this is the 5-day price action. Apple's down 2.8% for the week. Let's get a 3-month candlestick chart so we can see the decline. And as I pointed out earlier in the week, we haven't ever seen a decline like this from a record high in this quick a period of time. So lots of interesting things going on here. Can the market rally without Apple's participation? Absolutely. We can see cyclical and values pick up. Energy has been a really bright spot this week. But if Apple is crashing, if Tesla is crashing, especially in terms of sentiment and the negativity that brings to the market, it's difficult to see the S&P 500 advancing with some of those big leaders crashing. Here's the spider S&P 500 sectors on a 5-day basis. Energy is the leader here, up 2.3%. And just take a look at over the last month. Energy is also the leader there, 6.9%. As I pointed out, I believe yesterday, you take a look at a max chart. Let's pull that up one more time. We're going to see Energy XLE at a huge potential triple top, but trying to break free. If it breaks out of a 15-year consolidation, look out above, guys. But that's where the action seems to be right now in the energy sector.
We will keep on watching that. Thanks so much, Jared. Appreciate it.